Mark, good morning. Thank you so much for your time. Now, there's a lot of nervousness on the street as far as Indian markets go, understandably, ahead of this mega event. FIIs have particularly loved, in fact, the investing community have particularly loved the work done by this current government, even in the second term. How much probability would you assign that, once he comes in place, the reform momentum, which the street was directly observing, will continue in the same breath?
I think it will continue, and of course, much is contingent on how many seats the BJP are able to secure. And my sense is that there are many good pollsters who are on the ground and getting a very fresh read of the votes at the exit stations. And so if there was some disastrous result brewing, I believe those pollsters would have gotten wind of it by now, and they're all in the employ of fund managers, and fund managers would have been selling. So I am not expecting a bad result for the government, and I do expect a continuation of its reform policies.
Interesting. What about the valuation of the market? Do you also believe at the same time that bulk of the good news is now baked in, or do you think there is scope for further expansion?
I think there is scope for further expansion if the earnings grow. And if the economy grows, then the earnings will grow. If the economy grows by, let's say, 6, 7, 8% per year, then I think it's reasonable to assume earnings grow by 12, 13, 14% per year. And if you compound that a couple of years, then actually India is not expensive. If you could look forward 2 years, which I think any investor should do, if we're looking at this sort of mid-teens, double-digit earnings growth, in 2 years' time, the market will actually look very cheap relative to its peers.
What was?
If you like this video, then like, share and subscribe to ET Now.